Hello and welcome to Blytheway Business News. I am Bonnie Hughes. Our guest today is Piedmont Lithium. They are in North Carolina. They currently put out a scoping study. They are listed on the Australian Exchange and NASDAQ. And here to tell us all about the company is Keith Phillips, Chief Executive Officer. Hello, Keith, and thank you very much for joining us.
Hello, Bonnie. I'm very happy to be here. Thanks for having me.
Now, I understand that your project is in a very interesting area in North Carolina. Do you want to give us a bit of a history and background on it?
Sure. We're very fortunate. So we're 30 miles west of Charlotte in North Carolina on the Carolina Tin Spodumene Belt. So this is a historic lithium belt. Most of the world's lithium came from this belt from the 1950s to the 1980s. It's quite prolific. There were two large mines operated by what are now Albemarle and Livent, two major lithium companies that operated for 30 and 43 years respectively, are shut down now. They were depleted. But big infrastructure was built in the area. Big chemical plants for lithium processing were built and operate today in this area. There's a big lithium talent pool, and the infrastructure is absolutely first rate. So it's an area where there's a lot of expertise in lithium, which isn't that common in the world, and operating costs are very low. So we're very excited and very fortunate to be there.
And you just put up a updated scoping study. Do you want to give us some highlights on that?
Sure. We had an initial scoping study last summer, 2018. And it was very, very strong results. But at the time, we had a 16 million ton resource, so that supported a 13-year mine life, which was good. The numbers were really good, but we were really targeting a bigger mine life and a bigger project. So we did a lot of drilling earlier this year. We updated our resource. We now have almost 28 million tons. That supports a 25-year mine life at 22,700 tons of lithium hydroxide. It's a very significant producer. 20-plus year mine life, and the NPV has grown to over 1.4 billion US, over 2 billion Australian, really based on the improved mine life. And the costs were held very much in line. Again, we're in a really low-cost area. Labor costs, diesel costs, electricity costs, et cetera. Transport costs are very, very competitive. So we're very happy. We think it's a uniquely well-located project and will be a real low-cost producer.
I understand you also have some byproducts which help reduce your cash costs.
Yeah, so one of the former producers in the area, the Hallman Beam mine that was operated by FMC Lithium, we have a number of people who worked in that operation who consult with us. So we learned that half of their revenue for many years was byproduct quartz, feldspar, and mica. These are important industrial minerals in the Smoky Mountains area where we are, Georgia, Tennessee, North Carolina, Virginia. Quartz is used for glass, feldspar is used in the ceramics business, mica is used for joint compound and other industrial purposes. They're essential industrial minerals. There are pure play mica, quartz, and feldspar mines in our region. We'll be an exceedingly low-cost producer of these things, and that's a big market opportunity. It helps lower our operating costs, and we hope to commence a big market study on that soon. So stay tuned. That'll be a big opportunity. It's something that's really not available to more remotely located lithium mines where there's no market available for these minerals. So it's a good opportunity.
And I understand you've been on a land acquisition spree as well.
We have. We started with I think 415 acres, 3 leases on this belt. So again, the Carolina Tin Spodumene Belt. We now have over 2,200 acres we control, which we think is the biggest land package anyone's had in this region. On about half of that acreage is our core property where we'll do our initial mining, and that's where our 25-year mine life is now. So it's a large project. There's a lot more lithium on the belt that we don't currently control that we would like to, so we're in touch with a lot of other landowners. So the project is world-class in scale now, but I think it could be far bigger, and that's something we'll be committed to over time.
And it is open pit potential.
It's open pit and shallow open pit. So the old 2 mines in the region were open pit and shallow. A lot of the lithium projects in the world have some really good mineralization at depth, which is fine. We don't. Frankly, our mineralization, 90% plus of it's within 100 meters of surface, I think, or 150 meters certainly. And we don't think we'll mine beneath that. There's an awful lot of lithium that's shallow, which is lower cost to process, obviously. So from our perspective, that's a good thing. Yeah,
that is a very good thing.
Yeah, absolutely.
And can you explain to sort of our shareholders or viewers the difference between being a hydroxide producer and a carbonate producer?
Sure. So the major lithium chemicals are lithium carbonate and hydroxide. Carbonate's the bigger market today, but hydroxide is what you need in high nickel cathode batteries. So more and more the market's moving toward high nickel chemistry batteries, which are have higher energy density, longer range, less expensive to make, and use more nickel and less cobalt, so there's less reliance on the DRC. To make those batteries, you require hydroxide. You can't use carbonate. So the growth in hydroxide demand is dramatic. One of the estimates that we use in our presentation is 35% compound annual growth between now and 2025. So Tesla batteries use hydroxide, Volkswagen batteries and their whole family of cars will use hydroxide, et cetera. So it's a boom market. The lowest cost way to produce hydroxide is from spodumene, from hard rock lithium. So there's an old myth that brines are lower cost than spodumene, and to some extent there's some truth to that to produce carbonate, but we're going to produce hydroxide. We think we'll be an exceedingly low cost hydroxide producer from spodumene, and it's a faster growing market, higher price market, and we'll be a low cost producer.
You raised 21 million Australian dollars just in June, and you brought on some strategic shareholders. Is that 21 million going to be enough to take you through to what your plans are for the year?
Yeah, no, it'll take us well through this year and well into next year. So we were lucky. It was a very well placed institutional deal. We brought Fidelity in as a major shareholder, so they now own 9% of the company. Oz Super, which is a big fund in Melbourne, came in. They're a 13.2% shareholder. They bought their pro rata share. So we're very fortunate to have them. Also some other really high-profile investors in Australia, institutional folks that we haven't named, but they're important shareholders of ours as well. So we're very lucky. So we have today about $15 million in cash. We should end September with that amount of money. That's all we need for all of the catalysts we see over the next 9 months or so. And so we're in great position from that perspective.
And you're in the process of having offtake discussions with a few different types of offtake takers. Do you want to give us an overview of that? Obviously, you can't tell us who they are yet.
Yeah, no, but it's important in this business, unlike in a lot of mineral commodities where you're producing an LME commodity, you don't need any customers. We need customers. So we're talking to people throughout the battery supply chain, cathode producers, battery companies, car companies, Japanese trading companies, et cetera. I just came here from a trip through Tokyo and Seoul. We had some really good meetings. I think a number of things are clear. A, demand for hydroxide is skyrocketing, and the requirements to meet, VW themselves wants to bring 80 new electric vehicles by 2025. They're all going to use hydroxide. People need a lot of hydroxide. Their suppliers do. The biggest area of production for hydroxide is in China, and the producers are first class. They're great, but obviously the battery companies want diverse sources of supply. The second biggest production market of hydroxide in the world right now is North Carolina, where we are, Albemarle and Livent. We expect to be a big contributor to that. So our impression is our job is to be able to demonstrate we can produce hydroxide. We don't think it'll be very hard to sell ex-China hydroxide from North Carolina into the American market or the European market, which is growing very fast. We'll be a low-cost supplier into both of those markets. We hope we may have announcements on offtake over the coming months. We're certainly involved in some really tangible discussions and are very optimistic about how those will go.
That's excellent news.
Thank you.
And so right now, what are you working on with regard to the project to push it forward?
So we're focused, in this point in the market, we're very focused on what I call high-impact, low-cost items. So we've invested a lot of time and effort in the permitting process for the mine and concentrate plant. We're well down that path. We've been through the public comment period. That process has been very rigorous, but very fair and very good. We hope to receive that permit and expect to receive that permit this year. So that's sort of the major permit of the mining and concentrate side. It's a big catalyst for us. We may have announcements on the offtake side this year. We're also doing a lot of test work for lithium hydroxide. So we had a PFS level spodumene concentrate test program at SGS Lakefield earlier this year. That went very, very well. We're now taking the samples we created to look at a couple different flow sheets to produce hydroxide. And on the back of that, in March or April, we'll have more clarity on which flow sheet we're going to pursue, which technology we're going to pursue, and who we might work with on that. So that'll be important news. There are some other things going on as well, and everything's progressing well.
And you're still drilling as well?
We are. We're doing, right now, we have to do some infill drilling to declare reserves. We're not doing that today. What we're doing is we have one rig on property that's very tactically doing some exploration drilling. We have some really high priority targets that aren't in the current resource, that aren't in the current core property, but I think could demonstrate the market that this could be far bigger. And if you look at the land map and look where we are, look how big the trend is, we think there's hundreds of millions of tons on this trend. We just need to go find them. So we are doing that now, and we hope to have results there as well.
And are you planning to move to a bankable feasibility study in order to get potential debt financing?
Yeah, absolutely. So, I'm not sure exactly what the time frame of that'll be. Possibly the end of 2020. We need to do the infill drilling. That's probably a 6 or 7 month process from start to finish. So we're not going to start that until March, April, probably at the back end of this test work program. So we'll move aggressively toward that full integrated bankable feasibility study, hopefully by the end of 2020, early 2021.
And you've been traveling a lot, speaking to off-takers and potential new investors over the past few days.
Yeah, it's been good. I was in Australia. We have a lot of Australian shareholders, so I was there for some conferences and met most of our big shareholders. And then I've been here in London for the last 2 days. I haven't been here in over a year. And it's been great. I mean, the lithium equities are depressed. I think there's a lot of people looking around thinking this might be an opportune time to dip their toe in the water. And our story is not well known here. So we are listed on NASDAQ, as you said. We have some important shareholders in the U.S. We're listed in Australia, but there's a big market here as well. And I'm actually going to Germany and Switzerland from here. So we're trying to get the story out there. We think there were a number of very successful lithium stories in the last bull market, 2016, 2017. Our news has really come in more of a deteriorating market, 2018 and 19. But the market's going to change. It's going to change strongly, and we think we're one of the stories people should be focused on for that opportunity.
Well done for you continuing in the market that we've been in for the lithium market. It's been very difficult.
Has been. Yeah.
And so the news flow we can expect in the next few months is potential off-takers, progress on the project.
Yeah, so we hope to have news on the federal permitting for the mine and concentrate plant. We may have some exploration news. We've done a lot of soil samples in the area and some drilling. We'll probably make an announcement about some marketing opportunities on the byproduct side. These are markets that aren't that well understood by the street, so we're trying to provide more clarity on that. Certainly, we'd like to be in a position to announce something on the offtake side. And then we'll have the hydroxide test work. So there's a lot going on. We may have land acquisitions. We may have some other things. But we're busy, a lot going on, and all very, very positive. And there's great momentum at the project. We're waiting for the market to turn from an equities perspective, and we're sure it will, and we'll be well positioned for that.
Well, as we know, the commodity markets move in cycles, and so one time it's up, next time it's down. So time to get in when it's on the down low.
Yeah, what's clear about lithium, the demand for hydroxide is skyrocketing, 35% a year. I mean, you think about 35% a year between now and 2025, and strong growth from there. At that point, we might have 8 or 10% EV penetration. We're just getting started. So it's a mega trend, as people say. It's going to be a 2 or 3 decade trend at least. We have the best located lithium project in the world. We're very confident of that. It's very strategic as well. So it's going to be a lot of fun, and the market will catch on to that at some point.
Well, thank you very much for joining us, Keith. That's a very interesting project that you have, and we look forward to hearing more about it and watching your news flow.
Great. Thank you very much for having me. Appreciate it.
Thank you very much for joining us on Blytheway Business News. Have a very profitable day.